How do you invest in a money market fund in the right way? Is there a wrong way to invest in a money market fund? No. Is there a smarter and a better way to invest in a money market fund? Absolutely yes. If you have been in the money market fund space, you know money market funds don't reward people with small amount of money very well, right? And if you have more, it's better to put that money somewhere else for better returns. And I will give you an example. If you have 100,000 Kenya shillings, you earn approximately 1,000 Kenya shillings per month in a money market fund. And that's on the higher side, especially with the current rates. I mean, 1,000 Kenya shillings isn't much in this economy, although it's better than a savings account in a bank. Now, on the other hand, if you invest 1 million in a money market fund, you earn 10,000 Kenya shillings a month. With 2 million, you earn around 20,000 Kenya shillings a month. Good amount, right? But for 2 million, I think you can do a lot more with 2 million. But for those who have small amount of money, or you're not in a position to start a business, I have a solution for you today on how to invest smart or better in a money market. So in short, today I want to show you how to do this, or to invest in money market funds in the right way, how to invest smart. And for this, we have 3 important things that come into play. Number 1 is the value of time. Number 2 is the power of compounding. And number 3, the magic of consistency. So as we go into these calculations, I want you to keep this in mind. And because I want us to compare, let me define some parameters. So our initial investment is 100,000 Kenya shillings and 1 million, but feel free to replace these numbers with what you can afford or what you have. So number 2, we have the interest rate, and we are going to use 10%. We take a very conservative amount so that we can accommodate even money market funds that are not doing so well. Okay. And number 3, we will use a calculator that deducts the withholding tax, which is usually 15% of interest earned. All right. Number 4 is we are assuming that you're topping up every month as a pay yourself strategy. And for those who are new to this concept, pay yourself means that each month on the payday or any income that you're receiving, you put 10% of the total amount and invest. You put it aside and you invest. Paying yourself means setting aside money that will bring you more money working for you, or creating a source of passive income. That is our ultimate goal, all right? So now, because this is a comparison, we will have tables for both. Table A is the initial investment of 100,000 Kenya shillings with no top up. And table B is initial investment of 100,000 Kenya shillings and 5K top up per month. This is assuming that this person who can afford 100,000 Kenya shillings is paid 50,000 Kenya shillings per month. So 10% of 50,000 Kenya shillings is 5,000 Kenya shillings, which goes to paying themselves first. So let's see what the numbers are saying. For person 1, we will call her Susan, investing 100,000 Kenya shillings. Then we will look at person B, we will call her Mary, investing 1 million in the same money market fund. Now, let's key in the numbers. So we are starting with an amount of 100,000 Kenya shillings. Yes. And the investment period is 1 year. Okay. We are not injecting anything, or we are not adding anything to this money market fund. All right. We can just select monthly, but for the injection amount, we are going to key in 0. And then injection placement is at the start of the month. And then we are going to do a 10% interest rate per year, that is. So we hit on calculate, and here is the results. And you can see at the end of 12 months, Susan will have earned 8,839.09 Kenya shillings in that money market fund. Let us look at if Susan was topping up this account with 5,000 Kenya shillings per month. So what we are going to do, we are just going to adjust the injection amount. We put here 5,000 Kenya shillings, and then we just hit calculate. And remember, we are putting it at the beginning of the month. And you can see after 1 year, Susan will have a total of 166,232 Kenya shillings in her account, just because she is paying herself first. All right, and remember, this is money working for her. Okay, so far so good. Let's now go to Mary. And if you can start a money market fund with 1 million, it means that your salary or income is also good. So this is a person earning more than 100,000 Kenya shillings per month, right? So we can use 100K, the minimum. And our monthly top-up should now be 10% of the 100,000 Kenya shillings, which will give us 10,000 Kenya shillings per month. That is what goes to paying herself first. And this, you should not forget this, because this is how you grow your wealth. All right. So first table is 1 million over 1 year. Table 2 is 1 million with 10K top-up per month for 1 year. All right. So when we key in the numbers, so our starting amount is 1 million Kenya shillings, and then we are doing this for 1 year. We are going to say injection frequency is monthly, but for this one we start with 0 top up, and then it's at the beginning of the year, of the month, and then the interest rate is 10%. We click on calculate, and you can see at the end of 1 year, Mary would have earned 88,390,000 Kenya shillings. So in her account, she will have 1,088,390.91 Kenya shillings. Okay. Now let's look at what happens to this account if Mary was adding 10,000 Kenya shillings per month to as a top up in her account. So if we add 10,000 Kenya shillings, we hit on calculate, we are going to get that she will have in her account 1,203,178.07 Kenya shillings. So now you can see here the difference between putting in an amount and leaving that amount in the money market fund for a long time. And you can also compare this with if you are topping up consistently throughout the year. Imagine with what number this would be if we are looking at 2 years, 3 years, and 4 years and beyond. It will be large amount, and maybe we can do examples. Let's say we are doing this for 5 years. And for 5 years, you'll be able to raise, you'll have 2,261,724.97 in your account. And after you have enough in your money market fund, remember to always look for other investment opportunities where you can grow your investment further, or you can grow your money further. Don't just settle for money market funds, because you also have other investments out there that offer better returns than money market funds. So make sure after you accumulate your money in a money market fund, you are transferring that money to another investment with better returns. And if you're interested in exploring other investments with better returns, here is a video I compared 4 different funds that have better returns than money market fund. Make sure that you watch it and see if it's something you can take advantage of, and I'm very sure you're going to like it. Thank you and bye.